I've been working my career to build my actionable intelligence market insights to share with others and help create value for their platforms. And as a result of doing that and providing value to the more active players in the market, it's been successful.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further.
Welcome back to another episode of Weiss Advice. I am your host, as always, Yona Weiss. Grateful to be here today on another beautiful day with another amazing guest. We have Adam Dunn in the house, all the way from Boston. Welcome, my friend. How you doing?
Yeah, thanks, Yona. Happy to be here, and I'm glad we were able to connect in person in Atlanta at the CREI event. Thrilled to be on.
Absolutely, and it's not every day that we get to spend time together in person, and I love those type of networking events and making the LinkedIn connections come to life. That's really, to me, what it's all about, is finding the time to spend time in person with people. So yeah, very grateful that you took the time today. And yeah, I'd love to just get into the conversation and learn a little bit more about you for our listeners who maybe aren't, aware of who you are. I'd love for you to give a little background.
Sure. Yeah. Appreciate the question. So Adam Dunn, I'm based in Boston, as Yona mentioned. I'm a commercial real estate broker. I specialize in apartment investment sales and JV equity capitalization of apartment development sites across the Northeast. Most of our business is within Greater Boston, but we have intentionally started to grow market share across New England. I've been in the commercial real estate brokerage investment sales business for the last 12 years. Prior to that, I worked at a multi-housing investment manager that owned about 15,000 apartments across the Southeast. So since I graduated college 16 years ago, I've got my 20-year high school reunion coming up in 2 weeks from this recording, but I've been in the multi-housing business for the last 16 years, 4 of that on the principal side, 12 on the investment advisory side. So I feel like I'm probably going to be in apartments for the rest of my life, and I've really enjoyed the people that I've met and the time I've spent in the industry, and really enjoy what I do.
It's an amazing industry, and it speaks a lot to someone like you who, directly out of college has basically been in it and stayed in it because you've enjoyed it. Obviously, for me, the industry, real estate in general, commercial real estate, obviously more specifically, and then multifamily or multi-housing, even more specifically than that, is incredible culture. There's a lot of people in it that you really get to know and you understand why they're in it, and the majority of people are in it, to make a difference, in communities. And I think obviously there's a lot of money to be made in real estate for a lot of people. But at the end of the day, for a lot of people, including myself, it's about, what are your intentions and how do you connect with people through that? So, what was the transition for you? I'm just curious, going from, working for, a very large, like you said, multifamily owner and operator, to going to the investment sales side and the investment advisory side, which is obviously what you've been doing for the majority of the time.
Sure. So it was very intentional from the beginning. I've wanted to be a real estate advisor, broker for, I guess, since I was in middle school or high school. And people were saying, you wanted to be a broker, since you were little. And truth is, yes. The reason is my parents were residential real estate agents. So until college, I thought I wanted to be a realtor. I thought I wanted to sell homes. In high school, I was writing business plans on growing a residential real estate business. It wasn't until college that I took a course on commercial real estate investments, and it shifted my mindset. And I didn't know anything about the commercial real estate world. Took a course in college on the commercial real estate investment management, and it changed my perspective. And I realized the business orientation, the black and white of the commercial real estate sector on decision making and business strategy. It was easy for me to comprehend and understand compared to residential real estate, where people are focused on the aesthetics of a home, the paint color, neighborhoods. While that is, of course, applicable in what we do in the commercial real estate world, is very much more emotional in the residential world. And for me, the business orientation of commercial real estate spoke to me louder than residential. So in college, I shifted my mindset from wanting to be a residential real estate agent to wanting to be in the commercial real estate investment world. And before graduating college, there was a career fair, and I attended the career fair and spoke to someone who had a sign that said commercial real estate investments. I'm going to go talk to that person and learn what I could. And I had an interview for a manager in training position at this commercial real estate investment company. Had no idea what I was signing up for. 5 days after graduating college, I showed up to an apartment complex and learned that I was a manager in training of being a property manager at an apartment community.
That's quite the shell shock.
The headliner should have been leasing consultant, because that's what I was. And I ended up learning from the very bottom of the totem pole, so to speak, at working at a property, 350 unit apartment building in Charlotte, North Carolina, on how to lease apartments. And then that transition to, how to deal and manage resident expectations. And 6 months later, I completed and graduated the manager and training program, and they gave me my own 100 unit apartment building to manage myself. So at 22, 23 years old, I was responsible for a $5 million apartment building in Virginia. I'd characterize it as a class C plus B minus apartment building, where I was the sole manager of the community. I had a part-time person that worked on the weekends, had 2 maintenance staffs, and I took over a property in October of 2000, and that in the first 10 months of 2008, I kid you not, I was the 8th property manager in 10 months. The property was underperforming, it was 70% occupied. There was collections issues as well. And not knowing any better, I relocated from Charlotte to a city in Virginia, and I lived on site and took over the 46th worst property in terms of performance in my company's portfolio. They own 46 properties.
That's a good perspective.
In 12 months, we completely repositioned the property, and it ended up, the next year in 2009, it was the number one performing property with respect to NOI growth year over year in the entire portfolio. We were 100% occupied, 2% vacancy, 2% collections lost, and the property was starting to really take a turn for the better. And so I became known as, Mr. Fix-It in the portfolio. So then I moved to Lexington, Kentucky, and I worked at 2 other properties that were experiencing similar challenges, but not as bad, and helped reposition those. I ultimately relocated to Washington, D.C., and started working for Archstone, which is probably one of the more well-known property management and investment managers in the country at the time, before they were acquired by Equity Residential in Avalon Bay in, I think, 2012. Leading up to that time, I guess I should take a gigantic step back. In 2008, as I was joining the commercial real estate firm in the manager and training program, I had simultaneous conversations with a brokerage company. And they told me during my interview, unless you have 2 years of savings, don't even think about becoming a broker. So I really spent the next 4 years earning and saving money so I can make the leap into brokerage. So in 2012, right before Archstone was sold to Equity Residential in Avalon Bay, I had 2 years of savings and I quit. And I went to work at a brokerage company, full-time, 100% commission, and really started to cut my teeth on multi-housing investment sales. And I was selling apartment buildings, small apartment buildings, private capital, $1 to $10 million in Washington, D.C. And had a pretty successful, 1.5, 2 year run for being new in the business. I ended up with 18 listings in those first 2 years, and it took me 8 months to my first paycheck. And then I was ultimately recruited away to a much larger institutional-oriented brokerage company. So I went from selling $1 to $10 million deals on to selling and being part of a team that was operating a $2 billion a year transaction volume on the brokerage side, and was able to really transform my mindset from a private capital orientation to more institutional and private equity. And I learned a ton. For various reasons, I decided to relocate, and I ended up moving to Boston in 2016. So I joined a company in 2016 called HFF that was ultimately acquired by JLL in 2019. But I started to grow their multi-housing practice with my partner today from zero. We both came from different firms. HFF did not have a presence in Boston. And we grew that from zero to $500 million to $750 million in investment sales annually over the next 4 or 5 years before we got acquired by JLL. And then about 3 years ago, we moved over to a company called Brokerage, which is where we're at today. We've got a team of 4 people that do what I do. We've got a phenomenal back office analytical support and operations team that manages our business. And today, presently, I'm at Brokerage, managing director there with my partner, and we worked together for the last close to 9 years now, and doing institutional, middle market, private capital, investment sales of multi-housing properties across the Northeast.
So that's quite the impressive career. And I think the one thing, or actually a few things that strike me within that kind of recap of the last 16 years is, first of all, the property management stuff that you discussed was just incredible. And I want to get back to that in a minute. But the second thing is the transition from, like you said, the private capital, or kind of smaller middle market, I would say, as opposed to the more institutional capital, which is obviously much, much different when you're dealing with individual investors or syndicators or what have you that are really buying smaller deals or potentially just smaller portfolios, as opposed to the institutional capital that really, in a lot of cases, have unlimited funds for the most part. I mean, obviously that's an exaggeration to some point, but they're looking for properties like all the time to fit their investors' kind of portfolio. You talked about Avalon Bay and others that are obviously REITs. These are companies that have a fixed, I think the word I'm looking for is they have a fixed investment schedule for their investors, and therefore they have an obligation to acquire, a certain number of properties a year and, to operate just to keep up with their projections. So and again, I do want to get back to the property management side of it, because I think that's an important point to bring out for a lot of our listeners to understand how that actually worked, especially someone young doing that. But for me right now, what I want to know is that transition to the institutional time, which is obviously what you've been immersed in for the past, close to 10 years, is how does that differ? Because a lot of our listeners are investors in real estate, but are not on the institutional side and have not really invested maybe on the institutional side. So from an investor's standpoint, obviously you're not dealing with directly investors, you're dealing with the larger corporations, et cetera. But how does that differ from you when you're dealing with the client, right? You're dealing with, who am I dealing with? How does that differ for you? And why do you find that more, I guess, why you've chose to continue with that path?
Really, really good question. I'll do my best to answer it in the best way I know how. Real estate is relationship driven, it's data driven, and really a broker, you think of us as selling your real estate or helping you buy real estate. The reality is we help transfer information flows and provide real-time data insights to allow you to make an informed decision on whether it's a good time to buy, sell, refinance, et cetera. And, the institutional oriented firms are very data-driven, and they manage risk and capital for some of the largest institutions in the world, right? Whether they're your parents' retirement account, for a pension fund. But these investors are super sophisticated, dealing with billions and billions of dollars. And at the end of the day, that they're managing risk, and they rely on data, insights, and information to help them make informed decisions. And I think for me personally, I absolutely loved working in the private capital market, where I'm dealing and working with, advising with a generational family firm and helping them understand the real estate implications of their business. And if they're going through a disposition, it's for me, a very rewarding experience to work with the private capital families that have developed and built a 50-year, 70-year portfolio where their great-grandparents acquired real estate. It was passed down to their children, to their parents, and now they're at the helm. And these families have built incredible wealth for the most part managing their family real estate holdings, and they need an advisor who can provide them with actionable insights and market intelligence to help inform their decisions. And my experience has been that a lot of the brokers and advisors that work in the private capital middle market space, they're not leveraging the data analytics and information as much as those who are working with institutional investors. So I've found for me that being able to provide intelligence to institutional investors is very applicable to providing a very high level of service to private capital middle market families and family offices as well. I actually enjoy both sides, both investment spectrums, if you will, working with families and working with institutions. So I kind of play in both sides. Mm-hmm. I found that having real-time, boots on the ground, proprietary knowledge, if you will, of what's happening in the real estate and investment space, and I can share that with institutional investors and with families to help them make proactive and informed decisions, that excites me. And I do not feel like I have a job. I feel like I have a hobby. Mm-hmm. And I love what I do. And I love working with families. I love working with institutions and sharing advice. Just this morning before this call, I'm fairly active on LinkedIn and social media to provide as much value as possible. I had someone that works at a REIT message me and say, hey, can you provide me with the latest Boston market update? So I've got an investment committee meeting later this afternoon, and I'd like to know everything that's going on in the sales space. That excites me to no end, that someone would think that Adam's got valuable information that could help me provide our leadership team with actionable intelligence. At the same time, yesterday, I'm speaking with a family that owns $10 to $15 million worth of real estate. It's rewarding to me to work with both of those groups, but really to be able to provide backing up. It's rewarding to me to provide incredible market intelligence that I would provide this REIT that owns billions and billions of dollars of real estate, that to then distill that down in a manner that these private families can understand it and also help them make informed decisions.
To me, that's the most fulfilling part as well. In the business that I'm in, which is obviously cost seg, there's a lot of similarities in terms of who we're dealing with. Obviously, our company, the biggest national company, we deal with people on all spectrums. So, from REITs to private individuals and families and things like that. But for me, one of the most fulfilling things is seeing an individual, or a family or someone that's able to help get them to retirement, or, a patriarch of the family matriarch to be able to provide their children or their grandchildren with that legacy of passing that on. And that's, to me, amazing.
I'll just say also one more thing with that is, whether you're in the private capital business or the institutional business, and you want to go from private to institutional, at the end of the day, it's just another zero. And when I say that, you might say, well, Adam, haha, that's funny, but that's all it is. It's one more zero. And I had to put a post out on LinkedIn earlier today. It's easier to land a $25 million deal than to land a $5 million deal. And I feel like those that are acquiring the $25 million deals and the $50 million deals, it is just one more zero. There's an abundance and availability of capital that some have that, more institutional oriented and private equity firms have that the private investors just don't have that type of capital today. But it's a mindset shift. I know we'll talk later today about a mindset shift and paradigm for, in this discussion, but if you're looking to make the move from private capital institutional, it's a mindset shift. It's just another zero. The reality is the private capital space is super fragmented. Someone who owns a $5 million deal is getting called by 10 people per day like me that are asking, do you want to sell? 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 10 times a day, 5 days a week, 7 days a week, 365 days a year. And those are transactional brokers. My mindset shift when I was younger, I was in that transactional space. How can I sell your property to earn a commission? That shifted in probably 10 years ago when I realized, and I was surrounded myself with a lot smarter people than I am, that this is a long game. And if you can create long-term value and provide investors with actionable insights and market intelligence for years, that you're going to be top of mind when they're ready to make a decision. And the ones that are transacting $25, $30, $40, $50 million transactions, they rely on the select few advisors in their world, in their sphere of influence, to provide them that actionable intelligence. So I've been working my career to build my actionable intelligence market insights to share with others and help create value for their platforms. And as a result of doing that and providing value to the more active players in the market, it's been successful.
Yeah, to me, that's a huge value. I'm curious, going back to what we talked about, the property management side and getting really that firsthand feel of it. Do you ever think about kind of going back to that, or maybe going and investing on your own, whether to be passively or actively investing, managing, going back to that, kind of your roots, being on the ownership side of things?
Great question. And I thought that's where I wanted to be, earlier in my career. And I'm fortunate that along the way, I have met very smart people that sponsor real estate investments. And I have been fortunate to invest alongside of them as an LP. In my mind, and I know a lot of brokers invest with their clients or buy deals themselves, I think it's a conflict of interest to compete with my clients. So I've chosen not to invest and compete with them, but I'm happy to be an LP and invest with good sponsors that are buying good real estate. So I've been able to scratch my itch, so to speak, on getting into the investment space by allowing other highly competent sponsors to, invest on my behalf.
Yeah, that makes sense. And obviously there could be a potential conflict of interest there. I definitely, especially,
and whether there is or there isn't, in my mind, there is. And I can't shake it. So I can't move myself to do it.
Right. I mean, to be fair, if you were to go out on your own, I mean, you could find a different space. Obviously, you're dealing with the bigger players, kind of finding the mid-market or the smaller deals on the ownership side wouldn't necessarily be a conflict of interest, but I totally understand that. In fact, I have a friend who is also an investment sales, broker, and they also invest in real estate. And I asked her on the podcast as well, she was a guest a couple of years ago, how do you deal with that conflict of interest? Because again, she is buying deals on her own and at the same time owns a brokerage and is dealing with investors. And her answer was unbelievable to me, which is that her first priority is to her investors, right? And it really obviously takes integrity to be able to stand up to that. But if she finds a deal that is an amazing deal, even if it fulfills her investment criteria, she will always 100% of the time bring it to her investor, bring it to her clients first. And only then she will look on herself if no one's interested in it, or she'll find deals that won't necessarily fit the criteria of any of her investors or any of her clients. At that point she'll take it. So I guess it obviously deals with priorities, it deals with integrity, but I definitely understand how that can feel and certainly can be a conflict of interest in many cases.
Sure.
It's obviously a choice. So for me personally, it's much easier to be on the LP, the limited partner side, and invest passively alongside trusted people that, I've put my trust in and I've dealt with personally over the years in terms of dealing with them and watching them grow and watching them provide returns to their investors. And so for me, that's a no-brainer, much easier. It's called passive investing for a reason. It's much more hands-off. So I totally get that. But
until the capital call comes.
Which I think, unfortunately, for better or for worse, in 2024, a lot of people, including myself, have had that to deal with that. So, but it's all part of the it's all part of the game. It's all part of the process.
That's right. If you're worried about the capital call, don't put your capital in.
Exactly, and that's kind of been my perspective and what I've told people from the beginning as well, is that do not invest money in real estate or really in anything that you need. Right? Don't invest money that is, you're like, I have $50,000 in savings, I'm going to put it all in real estate. No.
Right.
But that also brings me back to what you mentioned earlier about going into the investment sales side and having had that idea put forth to you, which was that you needed 2 years of savings in order to do that, because going into commissions, only job is very difficult. And like you said, 8 months into it until you, really got your first deal, that's not all too uncommon. And I was actually had the same conversation. So when I first got my residential broker's license, I interviewed with a guy And he said the same thing to me. He's like, unless you have either, he said 6 months or a year's worth of savings, I guess maybe a little bit different. Maybe this was a different time, whatever. But he said, do not come into this unless you have another full-time job or you have, 6 months to a year of savings, because you're not going to see a listing. You're not going to see something. And it was much faster in the residential side, to be honest, to see the turnover, but it definitely was difficult this first 6-7 months or so.
Yeah, it was the best advice to transition to a commercial real estate brokerage business that I ever had. When this person gave me the advice in 2008, I didn't know what was going on with respect to the global financial crisis. I just graduated college. 2 months later, he had this conversation with me, and having two years of savings is then just unfathomable. That would have been $25,000, $30,000 for being 22, 23 years old at the time. It's definitely more now, but then I probably only had $2,000 to my bank account. And if I had taken the leap at that time, I'm quite confident. I don't know if I'd be in the business today.
It's a fair assessment.
Intentionally for 2 years or for the next 4 years, I saved the 2 years I needed to start in brokerage. And once I had the conviction that I had a padded bank account and could withstand the burn, I took a jump.
I love it. And for all intents and purposes, I think for a lot of people would have the same reaction, and most people, you've seen probably in the last 16 years, you've seen people get burned and people kind of burn out through that. It's not the space. In fact, I think real estate brokerage is one of those things that has like one of the most turnovers in terms of careers than almost anything else. Maybe I'm just making that up. It seems to be that way.
Sure. And my first year in the business, I'm not joking, I saw 26 people in my first year join the brokerage business and 26 people leave. And the majority of those that left is they simply ran out of cash and they had to go find a job so they could support themselves. And I'm not sure they received the same advice that I did. Funny enough, the same guy that gave me that advice in 2008, I worked with him in 2012, which very circular, small world business.
Absolutely. Yeah, what goes around comes around also. That's great. Adam, this has been amazing. I love the conversation. It's flowing, but we like to be mindful of time and transition now to what we like to call the final four. First question for you is, what's the worst job you ever had?
I've had a lot of jobs. I've always worked growing up, and candidly, I didn't have to, but I chose to because I liked gaining different experiences. So when I was in high school and even middle school, I mowed yards for money. I worked fast food. I worked retail before getting into career in commercial real estate. I can say I haven't had a bad job. I can tell you my personality and my mindset around work is starting things, building things, and improving things. And my worst experience, and it was both challenging at the time for me, but I also recognized that it bumped me 10x, right? So when I started in the brokerage business, I was calling 200 to 300 people a week and really burning the phones to generate business on the origination side. 18 months, 24 months in, I got a call to join that team that I mentioned earlier that was doing $2 billion a year in business. I went from originating business to really executing business on behalf of much senior team members that were generating a lot of business. Professionally, my advancement was 10x, right? I was calling people on $1 to $10 million deals. Now I'm calling people on $50 to $100 million deals. And the people that wouldn't take my call at the prior firm are now telling me how thankful they are that I'm calling them. That part of the career move was fantastic. But at the same time, I'm an originator. My mindset is always originating, and going from go origination to just executing the business and making calls for someone else is not my personality fit. So that was the more challenging job that I've had in my career.
For sure. And obviously we all kind of tend to drift towards those things that are more of our calling, and makes sense. And I totally get that in terms of the origination side. Also, I feel the same way personally. Second question, what's a book you've read that's given you a paradigm shift?
So I mentioned just a moment ago, I like to build things, improve things, originate things. And I've got a lot of ideas of things that would be great to accomplish in my life. Mentioned one earlier was I thought at some point that I wanted to go out and invest in real estate as a sponsor. And I found someone else to do that for me and has been successful doing that. The book that I've read that shifted my mindset is called Who Not How by Dan Sullivan and Ben Hardy.
Yeah.
And it's the whole premise of the book is who is best in class and has the core competency to help you achieve, the how, what you want to get in life, or, if you need to delegate something at a very high level, like who's the who to help you accomplish the how. And reading that book shifted my mindset, and I've become a much better delegator, much better leader as a result. And instead of Adam needing to be the person to accomplish it, I'm now figuring out who can help me accomplish this that's way more skilled and higher competence than I am in doing the same thing. So that book, Who Not How, is one of the better books I've ever read.
For sure. And we've had that book mentioned on the podcast multiple times. And for me personally, one of the biggest books that's given me a paradigm shift in my business as well in the past couple of years. So I love that. And thank you for mentioning that. Third question, what's a skill or talent that you would like to learn?
So I'll give you two, and I'll be brief on both. In the last few years, I've started to learn how to sail. I grew up doing power boats and motorboats, and I'm competent in that. But I always find being out on the water on a sailboat is very relaxing. There's a lot going on, right? And there's a lot of mechanics involved in sailing properly. But that has been a part of my life that I'm learning a new skill and new hobby in real time. And I have 3 kids at home, and 2 of the 3 are old enough they've actually started learning to sail as well. So I'm hopeful at some point we'll be able to sail together. And then my last hobby or skill that's more aspirational is I've always been interested in airplanes, and at an early age thought, a pilot path might be for me. I had a family member that was a pilot, and I've actually taken a couple classes as a pilot. I dropped that probably 20 years ago, but I have aspirations to pick that up. And it's probably my moonshot aspirational hobby, but something that I'm very interested in exploring and learning, and excited to see if that goes anywhere at some point.
Fascinating. Both incredibly fascinating, in the sea and in the air and on the land. Yeah. We're going to have Adam all over.
Yeah. From the ground or from the water and the air, Adam has your real estate needs covered. How's that?
There you go. We got to, we'll work on it a little bit, but it sounds like,
Yeah.
Sounds like you got a logo or a flyer coming up,
Yeah.
Fourth and final question. What does success mean to you?
But I touched on it very, very briefly just a moment ago when I talked about my kids and sailing. I've got 3 kids, and what success means to me is being able to provide for them in a way that my parents were great providers. They started with nothing, built great businesses, and were present as I was growing up. And I strive daily to be present for my children as they grow up. And honestly, that shift, I wasn't great about it 4 or 5 years ago. Really took what happened in 2020 with COVID and all of that to really shift and rebalance my perspective. I used to be in the office 6 a.m., 6 p.m., come home with a few minutes to spare to see them. Most times I was out really late with entertaining clients. And then during COVID, being at home, I realized what it takes to raise a child. And this whole epiphany occurred in my life where intentionally chose I want to be more present. So most days of the week, I am home at a reasonable hour and bath time, bedtime routine with my children, so I can see them every day of the week. On some dates, some weeks, and some days it's just not possible with travel, or I've got an occasional dinner. But I've intentionally scheduled my day so that I'm with my children as much as possible. Yeah. And to me, being present for them at the same time in a hobby and a career that creates generational wealth, and being able to provide for them is success. And being present with them and creating generational wealth is what I want to provide my family.
Love it. That's perfect. Love the answer. I very much aligned with that. And I appreciate, everything you've shared today, Adam. Really been insightful. I've gained a lot. Finally, where can our listeners find you or reach out to you if they want?
You can find me at adam.dunn, that's ADAM.DUNN at Berkadia, BERKADIA.com. That's my email. Feel free to drop me an email. I'm also exceptionally active on LinkedIn, and you can find me there. Just Google my name, Adam Dunn, and Berkadia, and you'll find me.
Absolutely. Yeah. We'll make sure to put that in the show notes for anyone who is interested in doing that. And appreciate you once again. Thanks so much for taking the time today. And I'm excited to hear what's next, if there is anything next, going forward in the air, on the sea, and on land.
I love it. Yada, really appreciate you, and glad we were able to connect, network, and meet in person a few weeks ago. And thanks so much for having me on your podcast. I'm an avid listener and really appreciate the opportunity.
For sure. And to our listeners, you guys are awesome. Thank you again for listening all the way to the end once again. And remember, until next time, the best advice comes only when you ask.
Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn. Send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.